What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we are going to be going over the Bitcoin charts, starting out with the bigger time frames, moving all the way down to the smaller time frames. I'll let you know how my trade's doing. Remember, 5 months ago, I talked about the high for this bear market rally being around 31.5. We got to 31.8. As you guys know, I've been short since 31.417. I've also laddered in more shorts since then. I've posted them in the Discord a few times. You can join the Discord below. But anyways, let's take a look at what's going on. But before we do, make sure you guys smash that thumbs up, leave your comments down below, and let me know what you think. I know most people are bullish out there. I've remained bearish since December 2nd, 2021, when I put out the video talking about the bubble pop, where I also described we would have a bear market rally or false bottom and then have 100% rally before going to the new lows. That is how bubbles pop. You can just simply chart or go to Google, type in market cheat sheet, and you'll see the same pattern. That's just how bubbles pop, guys. That's where the big money's made. And most people think that's doom and gloom, but honestly, that's the biggest opportunity of our lifetime coming. In my opinion, you can pretty much buy anything once we get to the bottom and ride it out for the rest of your life. If I'm correct, remember, none of this is financial advice, but so far this has been playing out for almost 2 years now. Exactly what we've been expecting. Let's take a look at it. So right here, the yellow line, I'm just going to show you real quick, the weekly bearish divergence. We had hidden bearish divergence on the white lines here. Those are not trend lines like to stay in. Those are just to measure the tops, right? So we had hidden bearish divergence right here, which is a continuation of the trend on the white lines. That's down. Yellow is bearish divergence. If you take a look at that, we made higher highs right here, lower highs in the RSI. That's weekly bearish divergence. I've been talking about this weekly trend line here. Keep an eye on this on your weekly RSI. If that breaks, it's probably going to be a pretty fast drop, just like we came up here. There's no RSI really support in here. I think we're going to have a big drop, right? So also, I wanted to show you the weekly MACD. I told you about this. Let's see where this closes this week, but we had our fake out to the bottom, came up top, but only to have a cross last week. Now, if this remains below there, that is nothing but bearish in my opinion, right? This has always marked the tops. You can see back here in 2018, it doesn't get the exact top, but it gets, very close to the top. Once this MACD crosses on the weekly, it's bad news for the bulls, right? Right here, back in 2019, same thing, came down. And then we had our 64,000 top here in 21 crossed. We had a cross right here in November 21. And now we are having this right here. Remember, could this turn around and get a big spike up and then, invalidate this? It's definitely a possibility. We did have that here, but so far we closed last week's. We crossed at the close last week. If we continue closing this week with the cross, underneath the cross, without this spiking up, it's bad news for the bulls, right? We've been looking for the same target, 37 to 9,700. That's the area I'm looking for the market bottom at the end of this year. Same thing I said back in 2021 on December 2nd. You can open up my YouTube page and that video is playing, right? Where I warned everybody of this. Let's look at the DXY. So the DXY, we've been talking about this falling wedge right here, right? And the point of rejections, depending on how quick it gets up there, 103.8 to 103.28, right? If we break above that and get support, it's super bullish. These are our targets up here. We have much higher targets too, but we'll play it as it goes. Another thing I'm looking at here on the DXY, right, is this rising broadening wedge. We are playing with the top trend line. We did spike above it. Now, if we can get support above here, let's take a measured move of that real quick. You would go from where it's breaking out, right? Go all the way down to the bottom, the widest point of the wedge, bring it up top, and that would get us somewhere around 107.5, right? That doesn't mean it happens in a day, right? This could take weeks. But once we break out here, we'll be looking for that 107.5. Then maybe we'll play on this top trend line going off these tops here before coming up to our target of 110 and then 115. And if this breaks, it's going to be crazy rally for the DXY. Now, I know everybody's talking about the dollar is dead. Guys, the dollar is not going to die that fast. It's just not how it works, right? It'll take years and years. And I do believe we'll get one more huge rally in the DXY. That means the dollar compared to other currencies will be way more valuable, right? It'll go way up. Stocks will go way down. And then you take that high value dollar and you get back into the stocks while they're low and just ride the wave, guys. That's what I'm looking for. Here is the daily chart. Now, you can see this green or yellow. Most of you guys know I'm colorblind. I'm not sure if this is green or yellow. I think it's yellow, but either way, this is our low after our all-time high, right? This was our first big low. That is at 32,940, right in that range. I'm not sure the exact number. Close enough. We did not get up there and break that. And another thing I want to point out, guys, let's take a look at, everybody talks about, it's 100% gains, right? But that doesn't, if it was $3 and went to $6, that's 100% gain. But let's take a look at from the top to where we're at now. We are still down 54%. So this rally did not even get back to 50% of the dump. Could it? Yes. Has it? Absolutely not. So if we get above this, then maybe change our tune on the bearish case scenario, but not just a wick above. I would have to see a bunch of open and closes above, right? But anyways, so even if it did do that, all them people that were telling you to buy at 60,000, 50,000, 40,000, 48,000, all them people are stuck up here, right? You would still be getting in lower than them. Just saying. Anyways, let's take a look at, we're still on the daily chart here. Here was our last low before the all-time high, right? And that's right now we are playing on this line. I believe once we break through this, start opening and closing some candles below, that'll probably remain resistance at 28.8. We also have this trend line here. We take a measured, take a measured move of that for the break. We do break down here. That measured move is about 18,000. We also have this support line here at 21.7. I showed you guys yesterday, if you take your fibs and you put it from the low to the high right here, our next line of support on the fibs is around 28,000. Probably bounce around in here for a little bit. Once that breaks, your next fib level is around 25.6. Now, if you look at these fib levels, you'll see the confluence. So let's look at the 236 across. Do you see all the confluence in here that it plays on that fib? Got bounces off it here, spike down below, and then what did we touch? The 0.382 fib. Guys, you could trade just off of these fibs, right? So let's look at the 5 fib, 0.5. You can see all the confluence right across here, even way over here, right? Then we look at the golden pocket range. Look at all the confluence here. Spike down below, got back above, bounce, rejection. Just, you can literally trade off fibs. Look at the 0.786. Look at all the bounces you got off that, right? Once you broke back out, you came up. Usually you play around these fibs, so you could actually short and long right on these fibs in between on the daily. Of course, using low leverage because you do get wicks. So let's look at the 4-hour. But before we do, make sure you guys check out Prime XBT. I have a link down below. They do help support the channel and sponsor me. So if you do join it, you can use my promo code SAVVY50. That'll get you up to a $7,000 bonus to use towards your margins. SAVVY25 will get you 25% off your fees. Definitely check them out. You can trade Forex, gold, silver, oil, S&P, crypto, everything all from one exchange, and you can hedge right in it. So if you already have, say you're in a short right now, you could put in a long to hedge, or vice versa. If you're in a long, you put a short to hedge it. Don't clump them all together like the crazy exchanges. Definitely check them out if you haven't already. We are going to have a trading competition probably next week. I will announce it when I get exact dates. The prizes will be, I think, $500 for the first place, $250 for the second and third place. It doesn't cost you anything to join. So start an account now if you don't have one. That way you'll be ready to join the trading competition. All right, let's take a look at the 4 hours. So here's the 4 hour, right? You can see these over here are our big fibs still, but we're going to look at the smaller time frame. First, I'll show you. This was what gave us that 31.5 target, and that was way back in January, right? As a possibility. So you take the widest point of this wedge, this falling wedge, you bring it over to where it broke, and that is how we got that target right here, 31.5. Like I said, we wicked above a little bit, no big deal. We are short from 31.417 was the first one, and I have a bunch laddered in. So if you did that, now how would you be safe in that trade? You put your stops right above this wave 2 right here, which would be around 31.475 or 30,475. So huge move. You still make your gains even if you get stopped out. But what I'm looking for is this to continue down to around 26.6 to 27,000, get a bounce back up into the 28,000 area. Now this bounce could go as far as back up to the 29.2 or whatever, as long as it doesn't break this wave 1, right? That's after a tag here. These are just waves within the waves. A lot of people are saying you broke wave 1 already. No, you haven't. You're still in wave 3. Once this bottoms, then you cannot go back up past 1 if this count is correct, right? We also have these measured moves here, and this one just being the rising channel. This yellow measured move here gets to 27.6, 27.5 range, and then you have the white bottom trend line here, looking at this as a broadening wedge, and the break of that gets you down to about 27.33. But like I said, I'm looking for this area for wave 3, then get a bounce back up. So I'm going to close some of my short here, probably about 50%, and then I'm going to re-enter when I catch the wave 4 here, coming down to wave 5. Now, does that mean that is it? That's as far as we go? No, absolutely not. We could get a huge drop. It really depends on what the markets are doing, traditional markets, what news they want to put out. But either way, I still think we see new lower lows at the end of the year, guys. So just be careful. Be careful. Be cautious. Now let's look at bubble pop patterns and see how they play, right? And why they play. Make sure you guys smash that thumbs up if you haven't already. Here's the Amazon in the .com bubble, right? So here's where the big bubble started, and you got this huge rally, right? Only to come back down to where it began. That is what happens in bubble pops. If you look here on this weekly trend line, right here on the RSI, we talked about the false bottom breaking the weekly trend line. We talked about that way before it happened. I didn't catch it, but I did warn you guys of that a long time ago. We talked about it every day back in 2021. The whole time we talked about this. So it broke up. You got the false breakout, and then it should come back down for a new low. We have plenty of room on the weekly, guys. You can see it here. So be careful. Yeah, just be careful. This is not looking like a bull market, guys. Nintendo bubble pop. See where it started, came back to where it began. Same thing here. Like I said, 35 to 9,700 is where I'm looking for the bottom range in here. Let's look at another one. This is Sony, right? Another thing I want to point out here in a minute, but you can see it always comes back to where it began, right? The bubbles always come back to where they began. So let's take a look at, go back over here. I've kind of lost my train of thought here, guys. What the hell was I thinking about? I don't remember. Anyways, let's go back to the 4 hour real quick. Just show you. You can see all these fibs line up with the VRVP right here, the volume profile. You can see where you should get bounces on the big volume profile, but notice how all these line up with the targets, and these targets are just measured moves and fib targets, right? And they line up with all of these. So that's another thing. Some people like to trade off this, which you could, I guess, but look at where the volume is, right? Let's look at this one is actually about 26.8. So we're right in between that 26.6 and 27, where we're looking for the third wave bounce. Just be careful out there, guys. I know everybody would love to see Bitcoin go up to $300,000 in 2 years. I just don't see it. If things change, I will let you know. But so far, this bubble pop pattern is playing out beautifully. And this is what I wanted to show. It took Amazon after the bubble pop 20 years to break the all-time high. 20 years, guys. Be careful. I'm out.